Hey guys, Gino here from Market Movers. Today we're going to talk about two major companies that reported earnings this week. We're going to talk about Chipotle, Mexican food, and we're going to talk about Netflix. So they both reported their earnings on Tuesday. This was recorded on Wednesday, will be out on Thursday. So the stock prices that I discuss are as of Wednesday at about 20 to 7 in Ireland. So I'm going to just go into why their prices moved, whether it be up or down, and just go through their earnings, what they were expected to do and what they ended up doing. So guys, thank you very, very much. Just remember, this is not financial advice. I'm not a financial advisor. This is for entertainment purposes only, and I hope that you can use this information maybe to help you, and we'll get straight into it. So guys, the first of the two companies we're going to look at is Netflix. So Netflix, which is trading at a 225.79 billion market cap as of today, and 511 euros per share, which is obviously going to move as we speak, and is down just below 4%. It was at 4% earlier, so it's hovering around that 4% drop. It's not a major drop, but it's large enough, and it's because their earnings were underwhelming. They weren't bad, they just weren't great. So we're going to get into them just fairly quickly there. So on Tuesday, they beat analysts' expectations for new subscribers in the quarter, but missing the target for estimates for quarter 3 2021. So it's more so this quarter wasn't the issue, it's that their estimates for the next quarter is that put people off. So some of the important numbers: revenue was 7.34 billion versus 7.32 billion expected. The EPS, which is earnings per share, was 2.97 versus 3.14, so that was obviously below. And subscribers added then, so they've added 1.4 million subscribers versus 1.12 million that were expected to be added. So it says here the company's announcement was flat. It was announced last night, so a 4% drop I wouldn't consider flat. And then they're saying, well, they gained more subscribers than expected in Q2. It fell short for the companies is predicting for Q3. According to their Netflix earnings report, it sees 3.5 million new users in the quarter, falling short of analyst expectations of 5.8. So Netflix obviously did pretty well. They did pretty well during the pandemic. It was a terrible thing to say, but it's probably the best thing that could have happened for a company like Netflix. People stuck at home. Obviously we've seen huge growth with Disney Plus as well, and I know there's other ones like Amazon Prime, and they've got loads in America, HBO and Hulu and all this. So Netflix is definitely the leader. It's definitely one of the biggest ones. It's still a great company. They're not bad by any means, their reportings, but they're just not as expected, because they were expected massive growth, and they've had massive growth over the last year. So I guess it's their expectations were high. You can see then if we come down a little bit, they're expecting the next quarter to do better based on the shows that are coming up. So some of the shows that I recognize anyway. So Cobra Kai, which you usually see painted behind me in my room, The Witcher, La Casa de Papel, I'm not familiar with that, and then 2022 like Stranger Things, Ozark, The Crown. They're all huge shows that are coming back. And the thing with shows at the moment, they weren't getting recorded. Sets were cancelled. We've seen a lot with COVID that sets were cancelled. Movies weren't recorded. Even when cinemas opened back up, they had like 2 movies to put in. So we will see an improvement, and we'll also see something that I found quite interesting that they announced afterwards, which is just down here. It just says here, look, then there are the reports that Netflix is jumping into the gaming category with the hire of EA and Oculus veteran Mike Perdue, who is set to lead the company's gaming effort. It's clear Netflix is looking to grow its offerings, but that will take some time, and it's unlikely to make a difference in the near term. That's actually quite interesting, because gaming is huge at the moment, streaming is huge at the moment, streaming games is huge at the moment as well, with companies such as Twitch, which is owned by Amazon. So if they can get into something like that and be successful, that's a whole new genre of people that they can get watching and paying for their subscriptions and watching their gaming. So that's an absolutely huge one. We play Corsair. Corsair is our gaming stock. Sam's very, very heavy in Corsair. He really likes that company, and they're in streaming, they're in hardware for gaming, but they also are bringing in lessons to learn how to stream, because it's massive. I was only listening to a podcast during the week of a new streamer called Aiden Ross. Now he doesn't do games. He started off in games, and he does like podcasts through streaming, and he could have nearly up to 100,000 people watching him at one time, which is absolutely huge for a live stream. Whatever about views on YouTube and things like that, a live stream of 100,000 people at one time watching you play a video game is really, really crazy. So that is the way things are going, and he spoke about on the podcast how his demographic is kind of kids in America under 18, and they're the people that mightn't even use YouTube anymore, and they're finding this new thing to use. So it'll be very interesting to see Netflix move forward into that, and that could go very positive, especially with hiring a veteran from EA and Oculus as well. So guys, that's Netflix. That's my view on Netflix and their earnings. I thought it was a pretty interesting. It wasn't a great one, but it wasn't too bad either. Chipotle Mexican Grill, so up 12.68%. Now that is a big move. So they have a $49 billion market cap. Per share 1,774. This is still seen as a growth play. Like Chipotle is a huge chain. For anyone who's been to America, Chipotle it's tasty, it's huge. They pride themselves on using all real food, as which in America is very rare in a fast food chain. So they claim to be healthy. Well, whatever. Like they're still a fast food chain, but it's an absolutely huge move. And the reason it's a huge move is because they're announcement. So second quarter highlights year over year, so I'm going to get into a few of these. So revenue increased 38.7% to $1.9 billion. So 38.7% in revenue is huge, and you're seeing that because you see America opening back up, people getting back into if every shopping center you go to, especially if you're in Vegas or LA or anywhere like that, every single shopping center has a Chipotle or two or three, some of them. So this is an absolutely huge, and the CEO of Chipotle, sorry, can't think of his name, but he was a previous CEO of Taco Bell as well, so he's pretty famous and he knows exactly what he's doing. He grew Taco Bell into a huge company, and he's doing the exact same thing with Chipotle. So comparable restaurant sales increased 31.2%. Yeah, so you can see that these companies are all their sales have increased due to people being back out and about, but there's still an extra 7% for Chipotle that on average the other restaurants didn't have. So digital sales grew 10.5% and accounted for 48.5% of sales. So that's pretty huge. So 48.5% of their sales are still online. Obviously in America you've got Uber Eats and all these things that would bring food to you quicker than we could ever imagine in this country. So it's pretty cool to see that that's still working away. So their operating margin is 13%, which is a massive increase from a minus 0.4%. Restaurants level operating margin 24.5%, which is the highest since 2015, and their diluted earnings per share was $6.60, which is a 2,175.9% increase from 0.29, excluding a 0.8 after-tax impact from expenses related to 2018 performance, COVID-19, blah, blah, blah. So they've opened 56 new restaurants, including one relocation, and closed 5. So that's huge. So you're talking just 51 new restaurants, really. Like that's an absolutely huge. And then they get into details. So this is their own website. When I looked at the Netflix one, it was broken down through Yahoo Finance. This is their own website, so there's no point. We're not going to go read all this and dilute all this. But basically, that they are fantastic earnings, and you can see it in the price. You can see they're up 12.5%. They're a brilliant company. Like they really are. I've looked at Chipotle a few times. I've never seen a point where I should buy, and every time I regret not buying it. Like so. If you just look at it there now, like 4p is 54. It's high, but it's not that high for a growth company. Like if you think about some other companies, for example, just to give you an idea of a growth company with a high forward PE, or with a bad forward PE, like minus 737.22. So there's a lot worse out there, but Chipotle they're certainly a huge player in fast food, and a lot of people are moving towards this more healthy side of things and trying to move towards health. And in America, their idea of health sometimes might still be fast food, because some of these people in these countries are working 70 or 80 hours a week, and they don't have time to cook. They've got time to eat when they're moving. So Chipotle is there to do that with locations all over the country. As you can see, they've in the last 3 months they've put up another 56. So look guys, that's it. That's the breakdown. That's the difference between Netflix, what they've done, why they went down, Chipotle, what they've done and why they went up. So guys, thank you very, very much. There is going to be more of these videos just going through some of our favorite companies as they release earnings over the next few weeks, and we hope you enjoy it and we hope it's helpful. And if you have any stocks you want us to talk about that are releasing earnings that maybe aren't that popular but you're invested in and you want us to talk about the earnings, please just leave a comment below in the comment section. We're happy to go through any company. We will be covering the main ones, but if you've got one in there that may be slipping under the radar or you think is a big company that isn't that popular, please let us know and we'll look into it. So guys, thank you all so much if you've gotten this far. I know some of the actual videos going into numbers and stocks don't do so well, but these are all the important things you need to know when you're investing your money, that you're putting your money in the right place, in the right hands, in right companies. So guys, thank you all so much. Please don't forget to hit the like button, hit the notification button, and hit the subscribe button. We really appreciate all the support so far, and we love it. We absolutely love doing these videos for you, and we really appreciate everyone that comes and watches them. So thank you all very much. Stay safe, and we'll talk to you next time.